morning for this Monday, March 24th. This is Todd Mitchell for the free video today. And if you recall, we were talking about the stock on Friday, ETN, Eaton Corp, ETN. All right, we were looking to buy this market. Remember, ETN is a stock ticker. We were looking to buy it above the high of this inside pattern after the market came down from this high into the logical support zone in an overall uptrend, right? Well, little did I know the market was going to gap up through the high, so I saw that about 5 minutes before the market opened, and I pulled my order because when I take a trade either up through the high of an inside pattern or down through the low of an inside pattern, I absolutely have to see the market trade up through the high as opposed to a gap, right? So if I was looking to buy it at 73.08, the market opened at 73.44. So it opened up higher, and I don't like the gap to trade up through the gap and be. I don't like to get filled on the open when it opens up through my buy point or down through my sell point. So I saw that, and so I canceled that order that you saw me place on Friday. So I took a look at this, and then I took a look at the intraday chart. Let's take a look quickly at a 5-minute chart. All right, this is a 5-minute chart of ETN. Okay, opened up right here. This is the opening 5-minute bar. This is where it closed on Thursday. Remember, I was looking to buy it up through the high. About 73.08, which was about right in here, and it opened up here, so I canceled that order before the market opened. Take a look at that bar, the opening bar. I mean, look at that long tail there. High, low, right? Open, high, low, close. I didn't like that pattern, so I didn't feel comfortable buying it as it came down to where I was looking to buy it. Now, remember, if the market had, opened up within the price range and then traded up through it, that's a different story. So the lesson of today's video was, if you're looking to buy a penetration through a high or sell the market down through a low, you really want to see the market trade up through the high as opposed to gapping up through it and buying it automatically on the open. You never want to buy automatically on the open, especially a stock, okay? Up through a high or down through a high or down through a low on a gap opening. I always have to see the market trade up through the high or trade down through the low. So that's what filters out a lot of my trades. Okay, so that's one of the filters I use when trading stocks or ETFs. I need to see the market penetrate up through the high or down through a low. If I'm looking to go short, I will never ever buy on the open or sell on the open. That's just a sucker's game. And so buying it on the open, you would have probably gotten filled way up in here. Remember, a market order or a stop order, when it gaps through, it becomes a market order. So you would have gotten some really horrible slippage on here. You would have been buying this market near the high of the day. So let's just take a look at what happened that day. So the market came down. Let's see here. So the market traded lower on the day and closed near the low of the day on Friday, right here. We opened up here today, and we're trading lower again. So that is a negated trade, and that is one of the rules that I use when trading stocks. Again, to quickly reiterate, you want to see the market penetrate up through a high or down through the low. Never a gap up through a high or down through a low, especially on open, okay? And that's what we're talking about here. On the open, that's when it gaps, all right? Hope that helps. Have a profitable day, and I'll be back with you tomorrow. Bye for now.